The Thai economy is expected to grow by more than 5% this year, according to the Bank of Thailand. But that forecast is under threat and the central bank may have to cut interest rates. Here to give us more clarity is Bank of Thailand Governor Dr Prasan Triratvorukul. Mr Prasan, thank you for talking to Reuters. Now let's start with that growth forecast. China, Asia and the rest of the world is slowing. How much downside is there to your 5.7% GDP growth forecast?
Well, for this year, we are still quite confident that we can achieve that 5.7% growth rate. Half year, in fact, exceed the expectation. The second half, probably the impact on export slowdown, probably the growth rate will be slightly lower than we expect. So all in all, it make up to 5.7.
Can you quantify that for the second half of the year? Can you give us a ballpark number?
Oh, it's the export certainly will be slightly lower than what we expect of 7%. It can be lower than 7%. But as I said, the first half exceed the expectation. So 5.7 we should be able to achieve.
You said recently that the central bank has room to ease policy. Most of the data, as you touched on, the exports, for example, suggests you do have room to ease policy. How much room do you think you have?
Oh, our policy rate is 3%. In fact, the latest MPC meeting, we saw the impact on the export slowdown. But on the other hand, the domestic consumption and investment is very robust. Noticeably, the expansion of private credit is also very strong. It's the view of the MPC that it's not the right timing at the moment because the transmission of any downward adjustment will not be carried out by the market because commercial banks are now in fact expanding their loans. They are competing very strongly on deposit mobilization. Now looking forward, certainly we are watching the development in the world economy, how much that will impact our economy, how robust the domestic consumption and investment will still continue. We will look at all these factors.
From what you're saying, it seems like the domestic economy, the expansion of credit within Thailand, these kind of factors, they're having more influence on your policy thinking than the external outlook. Is that fair to say?
Yeah, sure. Certainly we are, the primary responsibility is to keep the stability of the Thai economy, not the world economy.
So if you extend that, then the room for rate cuts is probably smaller than maybe many out with Thailand think.
Well, on the domestic side, again, the consumption can also be moderate, investment can be moderate. When export slow down, certainly related production will be cut. So that will also impact the purchasing power and consumption at the end. And some of the short-term stimulus measures introduced by the government will also be weaned off. Investment, part of them also is a recovery from the flood. Although the longer-term infrastructure investment as planned has been observed to be quite slow. So looking forward, that the growth rate in the domestic demand can be quite moderate, and probably the timing. The good timing is when you go in, and then if you observe that there are some lack of confidence in the market, or there are some risk premium in the credit market, that's the time when you want to go in. It's a role of monetary policy to go in and restore confidence. It's not now.
Okay. We've talked about the external environment. Of course, the Fed this week may launch QE3, more stimulus, more liquidity into the US and the world markets. How worried are you about that liquidity affecting your currency and inflation and ultimately your policy goals?
Well, there's no doubt if the Fed introduces QE3, that will be equivalent of injecting certain amount of liquidity, extra amount of liquidity, and hence will result in lower interest rate in the U.S. Market. Part of those funds certainly will spill over to our part of the world, for sure. But I don't think it will be as strong as during the QE2. At that time, the expectation of growth rate in Asia was very high. But now, overall, I think globally it's a slowdown. China in particular and Southeast Asia, I think it's a slowdown. So even there will be such spillover, it will not be as strong as in the QE2.
So you don't fear, you're not too concerned then about the potential upward appreciation of the baht resulting from QE3?
Well, we have to be prepared. Certainly in our part of the world, this can be a concern. But you know, with flexibility in the exchange rate policy, sometimes intervention in the market, and lately, in fact, Thailand in particular was quite successful in introducing this so-called outbound foreign investment. There are more outbound capital flow, which take and give more balance to the flow in and flow out.
So you stand ready to act on the baht if the situation requires it?
Well, yeah, we try to keep things in order, try to keep ammunition in order. It's going to be a mix of instruments. Flexibility in exchange rate would be the key. What we have done for the past 2 years, the outbound flow is also very critical. We try to avoid market intervention because it can be quite costly. We will probably do only when there is excessive volatility in the market, or there is any what we consider as abnormal movement in the exchange rate. Plus, there are some also macro-prudential policies that probably we can implement to prevent any undesirable consequences of excessive flows.